Hello guys, my name is Vijay. I'm a certified management accountant and I've got a diploma in corporate tax from ATT UK. Uh, I will be uploading a few videos on the various articles under corporate tax regime for the UAE. So today we're going to talk about article number 11, which is taxable persons. And let's see what article number 11 talks about. Okay. Now, there are two types of taxable persons in the UAE. One is the resident taxable persons, and another one is the non-resident taxable persons. Okay. Now, when I talk about resident taxable persons, it's nothing but the companies which are situated in the UAE are resident taxable persons. Now, the companies which are not situated in the UAE but are incorporated outside UAE but controlled and managed in the UAE are called non-resident taxable persons. So we'll talk about it in the upcoming slides. But for now, just remember who are the taxable persons in the UAE. One, resident taxable persons. The second, non-resident taxable persons. Now, for some time, let's speak about the resident taxable persons. Now, what are the different types of resident taxable persons? First one, juridical person incorporated in the UAE. Now remember, when I say juridical person is nothing but the companies which are incorporated in the UAE. Okay, the term juridical person is often used in the corporate tax world. Okay, juridical person is nothing but the companies. Okay, so first thing, the companies incorporated in the UAE are resident taxable person. Second one, juridical person. Again, when I say juridical person, nothing but the companies incorporated outside the UAE but controlled and managed in the UAE. Okay, so the companies which are not located in the UAE or which are not registered in the UAE or which are not incorporated in the UAE, but these companies are controlled and managed in the UAE. Okay, even these companies are taxed in the UAE. Okay, so we will speak about this in the upcoming slides. But for now, remember the companies which are incorporated outside the UAE but controlled and managed in the UAE are also taxed in the UAE. Partners under incorporated partnership. Okay, now under incorporated unincorporated partnerships, sorry, partners under unincorporated partnerships. Now under unincorporated partnership, okay, any unincorporated partnership in the UAE, okay, that partnership as a company is not taxed, but then the partners individually, okay, they are taxed. We will speak about this in our upcoming slides. Next one is a natural person. Now natural person is nothing but common person, like I am a natural person, you are a natural person. Okay, these are not companies. Natural person is a human being. Okay, now if these natural persons, okay, are conducting business activities in the UAE, okay, are taxed. Now you may ask question, how come a natural person, okay, if a natural person is conducting a business in the UAE, so that means they have to have a trade license, right? No. So when I talk about specific natural persons, for example, YouTubers, social media influencers, okay, and those kind of people are also taxed. Okay, uh, but yes, don't worry. For them, there is a set of different rules. Okay, so which we will be speaking more about in our upcoming videos or probably in the same in this slide as well. So for now, just remember natural person, okay, are taxed, but only if they are conducting business activities in the UAE. any other person as may be determined in a decision issued by the cabinet at the suggestion of the minister. Okay, so probably in the future, okay, there may be cabinet decisions or ministerial decisions which may come up in the future. At that point of time only we'll come to know who else will be added as a resident taxable person. Okay, so again, summarizing, juridical persons incorporated in the UAE means the companies incorporated in the UAE, they are taxed. Juridical persons incorporated outside the UAE but controlled and managed in the UAE means the companies which are not incorporated in the UAE but are controlled and managed in the UAE are also taxed. Partners under unincorporated partnership are taxed. Natural person only conducting business activities in the UAE are taxed. And any other person in the future where there may be a cabinet decision or a ministerial decision, okay, which tells that, okay, so and so companies also will be taxed in the future. Okay, now let's go to the next slide. Now let us see some examples who are the juridical persons incorporated in the UAE. Okay, LLC. Now most of the companies what you see in the UAE are LLC. LLC is nothing but limited liability company. You also have public joint stock company, private joint stock companies, free zone companies. Okay, now again, free zone company, we have a different article where it talks about qualifying free zone companies and non-qualifying free zone companies. Joint liabilities companies, limited partnership companies, foundation trusts that have been established under the UAE mainland legislation, other entity forms that have a separate legal personality under the applicable UAE mainland legislation or free zone regulations. Okay, so now don't worry when you see all of this. Okay, as in when we study a lot of articles in the upcoming days, in the upcoming weeks, or in the upcoming months, okay, it will come to what exactly these companies are. Especially free zone is a major subject under corporate tax, and we have a different article where we will speak about free zone, and it's a very important topic. Okay, now very important note: UAE branches of a domestic or foreign juridical person are regarded as an extension of their head office and therefore not considered separate juridical person. So that means uh, your branches in the UAE. For example, you have an head office, and your head office has got a lot of branches. Now, branches are not required to register for corporate tax. Only the main entity is required to register for corporate tax. Okay, so we will speak more about this in our upcoming articles. But for time being, just remember, UAE branches are not required to register for corporate tax. Okay, so now we have seen a list of examples of juridical persons incorporated in the UAE. Again, I am telling juridical persons are nothing but the companies which are incorporated in the UAE. Now, let us see an example. Juridical persons incorporated outside in the UAE but controlled and managed in the UAE. Okay. Let's see how it works. Okay, by seeing an example. Company E is a limited company registered in country Qatar. Okay, now there is a company E, a limited company registered in company Qatar. All of the key management and commercial decisions of the company E are made in Queen. Now, see, the company is incorporated in Qatar, but the management, the key management, and the commercial decisions of this company, which is in Qatar, are made in Queen. As the key management and the commercial decisions are made in the UAE, company E will be considered as a resident person and will be required to register for corporate tax in the UAE. So, any company which is registered outside the UAE, but if you're controlling and managing that company in the UAE, if you're taking key management decisions and commercial decisions in the UAE, okay, then that company will become a resident person. Okay, so if a company becomes a resident person in the UAE, then automatically, okay, you have to register that company for corporate tax in the UAE. Now, there is an exemption, okay, where you can file an application or an election with the FTA saying that you're already paying a corporate tax in Qatar. Okay. Now again, you may end up paying a double. So basically, this is called as double taxation. So there is a relief which is given by the FTA. Again, we will speak that about in our upcoming articles. But for now, just remember, if there is a company incorporated outside of UAE, but if that company is being managed in the UAE, and key management decisions are being taken in the UAE, then that company automatically becomes a resident person. And if a company becomes a resident person, then you have to register for corporate tax, and you may end up paying corporate tax on the profits of that company. Okay, provided provided if you have made an application or election for an exemption, then your then you can then basically you may end up not paying any tax. But again, we will speak about that in our upcoming articles. Let's move to the next slide. Now, as you all aware, the taxable rates of the juridical persons. Okay, currently taxable income not exceeding 375,000 dirhams. Okay, now these are taxed at 0%. Okay, always remember, taxed at 0%. Okay, there's often a misconception. They say that up to 375,000 is exempted. Now, this is not exempted. This is taxed. Okay, but these are taxed at 0%. Now, this 0% may change in the future. Okay, it may become 1% or 2%, 3%. We may not know as of now. But for now, remember, any taxable income not exceeding 375,000 are taxed at 0%. Taxable income exceeding a 375,000 are taxed at 9%. Now, remember, the corporate tax, the CT tax, are always taxed on your profits and not on revenues. So there's a reason I have specifically mentioned over here tax on profits. Taxable income is nothing but profits. Okay, your taxable you don't end up paying your corporate tax on your revenues, but you end up paying corporate taxes on your profits. And also remember, if your profits are not exceeding AED 375,000, you are taxed at 0%. If your taxable income is exceeding 375,000, then you are taxed at 9%. Okay, let's move to the next slide. Now, when you're preparing financial statements, okay, many companies, they may end up preparing financial statements separately for corporate tax. Okay, and the regular financial statements which you prepare for your yearly closures. Okay, so in the upcoming years, I see that a lot of companies, they end up preparing two financial statements, one for the yearly closure, and the other financial statement will be for your corporate taxes. Now, a taxable person's accounting income, profit, and loss, as stated in the financial statement, is used as the starting point for calculating the taxable income. Now, the starting point in order to calculate your corporate tax is your net income. Okay, now remember that net income not necessarily becomes your final amount in order to calculate your corporate tax paid. No, there'll be a lot of adjustments, plus minus. That's why we have a lot of articles over here under the corporate tax regime. Okay, Second point is taxable persons that earn revenue that does not exceed 83 million in the tax period may use cash basis of accounting. What does it mean? Now, any business, okay, if its a revenue in a year does not exceed 3 million, okay, then the corporate tax, the federal tax authority, okay, allows you to use cash basis of accounting instead of accrual basis of accounting. We all know what is the difference between cash basis of accounting and accrual basis of accounting. Once a taxable person revenue exceeds 83 million in the tax period, they may prepare financial statements using the accrual basis of accounting, except under exceptional circumstances and following the FTA's approval. Now, once your revenue, once your revenue exceeds 83 million in the tax period, okay, then you have to prepare your financial statements using accrual basis of accounting. There may be some exemptions, okay, for not using accrual basis of accounting, even if your revenues are exceeding 3 million, but that is only under certain exceptional cases after the approval of the FTA. Again, if your revenue does not exceed 83 million, the FTA allows you to use cash basis of accounting, okay, for showing your corporate tax returns. But once your revenue exceeds 3 million in the tax period, then you must prepare financial statements using accrual basis of accounting. You don't have any choice. Taxable persons must prepare financial statements in accordance with the IFRS. However, taxable persons that earn revenue that does not exceed 50 million may apply IFRS for SMEs. What does it mean? If your revenue, okay, does not exceed 50 million, then the FTA allows you to use IFRS for SMEs. If your revenue exceeds 50 million, then the FTA requires you to follow the full IFRS. Okay. Next point. Applying IFRS creates a common definition of accounting income across business types and industry. For further details on accounting standards for corporate tax, refer Ministerial Decision 114 of 2023 of the accounting standards and methods for corporate tax purposes. Okay, now whatever the Ministerial Decision number 114 of 2023 talks about, I've already covered here in these points. Okay. So next point is some taxable persons may be required to maintain audited financial statements. This means that the financial statements must be checked by the external licensed authority. Okay. Now, who are these companies who has to maintain audited financial statements? Okay. Now, following persons are required to maintain the audited financial statements. Okay. Now, a taxable person deriving a revenue exceeding 50 million during the relevant tax period, and a qualifying free zone person. Okay, now any company whose revenue is exceeded above 50 million, okay, they are required to have an audited financial statement. Number one. Number two, any company whose revenue is exceeding 50 million, they need to also follow IFRS full. Again, I'm repeating this 50 million rule. Any company who has exceeded 15 million, they need to have their financial statements audited, and also they need to follow the full IFRS. That is one thing. Second thing, the companies whose revenue is less than 50 million, okay, the FTA has given an option for them not to maintain audited financial statement, but to follow IFRS for SMEs. This is the 50 million rule. Again, I'm repeating, any company whose revenue exceeds 50 million, they are supposed to have their financial statements audited and also to follow IFRS full. Any company whose revenue is less than 50 million, okay, FD has given an option not to maintain audited financial statement, though the company will maintain audited financial statement, but it's not required for corporate tax purposes. Second thing is they're also eligible to maintain IFRS for SMEs. Now, when it comes to qualifying free zone person, regardless they exceed 50 million or not, compulsory they have to maintain audited financial statement, and they're also required to follow the full IFRS. Okay. Now, what did we learn from this slide? The first thing is a taxable person. When I talk about taxable person, the company whose revenue does not exceed 3 million, the FDI has given them a privilege to maintain a cash basis of accounting. If a company exceeds 3 million, from cash basis of accounting, they need to follow the accrual basis of accounting. This is a 3 million rule. What is the 50 million rule? Any company whose revenue exceeds 50 million, they need to maintain the audited financial statement and also follow the full IFRS. Any company whose revenue does not exceed 50 million, so any company whose revenue does not exceed 50 million, they are not required to have an audited financial statement, but they need to follow the IFRS for SMEs. And a qualifying free zone person, regardless they make 50 million or not, so that means even if they make a revenue of 10 dirhams, they still need to maintain an audited financial statement and follow full IFRS. Now let's go to the next slide. Now, let us understand for some time partners under the unincorporated partnership. Now, what is the tax treatment on partnerships and what will be the tax impact? Will the partnership be taxed? Now, unincorporated partnerships are not taxable in its own rights. What does it mean? Any unincorporated partnership, okay, as a company will not be taxed. So that means that particular partnership will not pay any corporate tax. But then the partners individually will end up paying the corporate tax on their individual taxable incomes. Are the partners taxed? Yes. Partners of the unincorporated partnerships are tax subject to election by the partners to the partnership. That means, what does it say? What does it mean is the partners individually are taxed, but then the partners can come together and elect that unincorporated partnership to pay corporate tax as a company. Okay. Now, we will be studying this unincorporated partnership more under Article 16. But for now, just remember, unincorporated partnerships are not taxed in its own rights, but then the partners individually are taxed for corporate tax purposes. Now, let us understand national persons conducting business activities in the UAE. What are the examples? A human being running a YouTube channel. Okay, obviously, there's a lot of YouTubers these days, they earn a lot of money, and the FTA has given a certain rules for them earning money. We will talk about national persons more in the upcoming article. For now, just remember a few examples which I have listed down. The second thing is an influencer promoting a company via social media, a trainer conducting tuition classes, a coach conducting training on his or her skills. Okay, now these are some examples of national persons conducting business activities in the UAE. Let's go to next slide. Now, national person stamp tax impact on various revenue. Okay, now what for a national person, what will be the various source of income? Okay, first thing is salaries. Now on salaries, what is the tax impact? There is no tax on salaries in the UAE. Personal investments. So when I talk about personal investments, what will be the personal investments? Examples: shares, national bonds, etc. Now, if you're earning dividends out of your personal investments, what will be the tax impact? There won't be any tax impact. Real estate investments. Now, you have, as a national person, as a human being, you've bought properties over here in the UAE and you're earning some rent out of the UAE, or you've got some capital appreciation. What will be the tax impact on it? There won't be no tax impact. You don't pay any tax on it. Now, conducting business in the UAE. Okay, as a national person, you may conduct some business in the UAE. Now, what are the business in the UAE? As I've told in the earlier slide, you may be running a YouTube channel, or let's go to the previous slide. Yeah, you may be running a YouTube channel, or you may be an influencer promoting a company via your social media. You may be running a tuition classes. You may be a coach who's training on her skills. So these are the business activities in UAE. Now these business activities are taxable. Okay. Now whatever I have spoken over here are all listed in the cabinet decision number 49 of 2023. Now let's go to the next slide. Now let's see the taxable rates of a national person conducting business activities in the UAE. Okay. Now, a national person who conducts a business activity in the UAE and whose revenue does not exceed 1 million, for them, they don't need for corporate tax registration. Only when do the national person register for corporate tax? When the revenues exceed about 1 million. That's when the national person has to register for corporate tax. Corporate tax registration is required and file taxable returns. This will be the tax impact only when a national person exceeds the revenue above 1 million. But again, you just need to register for corporate tax when you exceed your revenue for 1 million. But again, if your taxable income, that means your profit, does not exceed 375,000, then you're taxed at 0%. Next slide. Now, so we have talked about taxable persons. Okay, now we are now entering the non-resident taxable person. Now, who are this non-resident taxable person? Having a permanent establishment in the UAE. Now, what is this permanent establishment in the UAE? For example, British Airways. British Airways headquarters are in the UK. Now, they may be having a branch here in the UAE. Now, those branches are called permanent establishment. Likewise, Amazon head office is in the US, right? Now, Amazon may have branches over here in the UAE. Now, these branches over here, Amazon branches over here are called permanent establishment. Having nexus. For now, remember, whenever you see this term nexus is related to immovable properties. Immovable properties. Sorry for my bad handwriting, but please bear with my handwriting. We will be studying this in a lot of articles, but for now, just remember, if you see a term nexus, it means nothing but immovable properties. Okay, having a UAE sourced income. So let's talk about non-resident taxable persons more in the upcoming slides. Okay, now let's see an example of a permanent establishment in the UAE. Now, where a non-resident person had a fixed or permanent place in the UAE through which the business of the non-resident person or any part thereof is conducted. Now, how a non-resident person, okay, in the UAE can conduct a business? It can conduct through a branch. We just spoke about the British Airways. It may have a branch here in the UAE, though the headquarters are in the UK. And also we spoke about Amazon, the headquarters in the US, but it may also have a branch in the UAE for its operations here. Even so that means what? These branches must register for corporate tax in the UAE. An office, no, it's not necessary. Okay, it can have in the sense like it can have a back-end office. It can also have a factory, a workshop, etc. Now, currently we are studying article number 11. Now, all of these will be studying more in detail under article 14. Okay, now let's go to the next slide. Now, as I told you, whenever you see the word nexus, this should be related to immovable property. Okay, now any company, okay, any juridical person that is a non-resident person shall have a nexus in the UAE if it earns income from any immovable property in the UAE. What does it mean? If I've got a company in India, my company is registered in India, but my company owns some immovable property in the UAE, and I'm doing business out of that immovable property. Say I'm earning rent, or I have let out to some other office. I'm doing for some commercial purposes. Whatever income I earn out of that immovable property is called as nexus. Okay. Now we will study more under Article 14. Okay, and also you can refer to Cabinet Decision 56 of 2023, which I've already covered in my slides. Okay. Now the next thing is having a UAE sourced income. Okay. Now what are we studying? How are the non-resident taxable persons in the UAE tax? So first thing what we saw is a non-resident person having a permanent establishment in the UAE are taxed. Now there are different forms of permanent establishment. One can be a branch, an office, a factory, workshop. Okay. I'm just explaining you guys in a very what to say. I'm not going in a detail because we will be speaking in detail under Article 14. But for now, remember three things. Who are the three people? Non-resident taxable person. One is any company. A non-resident person having permanent establishment in the UAE are taxed. Second, having a nexus in the UAE. When you see the term nexus, immediately remember it is an immovable property. The third thing is the UAE sourced income. Okay. Now, any juridical person that is a non-resident person shall not have a permanent establishment or nexus, but earns income. Okay, shall have a UAE source income. So, if this income is not from your permanent establishment, neither from nexus, that means immovable property. Okay, so apart from these two, if you earn as a non-resident person, if you earn a revenue, this will come under UAE sourced income. Again, we'll be studying more about this under Article 14. But for now, just remember these three things: who are the non-resident person, taxable non-resident person, permanent establishment in the UAE. Somebody's having a permanent establishment in the UAE. They are taxed in the UAE. Somebody's got a nexus. Any juridical person's got a nexus in UAE. They are taxed. Any juridical person having a UAE sourced income, apart from the revenues you earn out of your permanent establishment or nexus. Okay. Now, what is the tax impact on the non-resident persons? Now, first thing, having a permanent establishment in the UAE, you are subject to corporate tax. Nexus, you are subject to corporate tax. But see, the third one, if you do not earn revenue, okay, if your revenue is not from your permanent establishment or nexus, that becomes UAE sourced income. So this is not subject to corporate tax, but is subject to withholding tax. Now, currently in the UAE, withholding tax is 0%. But this 0% may come up in the future. But right now, the withholding tax is 0%. Okay, so let's move to the next slide. Okay, now I've put a very nice table for you guys, so that it will become very easy to see. So I have put taxable persons. I have divided taxable persons into two: resident taxable persons, non-resident taxable persons. Okay. Now, resident taxable persons are of two kinds. One is juridical person. Second one is natural person. When I say juridical person, nothing but the companies. Natural persons, obviously human being. Okay. Now, juridical persons incorporated in the UAE. Now, there are juridical persons which are not incorporated in the UAE but are managed and controlled in the UAE. Now, be it incorporated in the UAE or not incorporated in the UAE but are managed and controlled in the UAE, both of these companies are taxed in the UAE, right? Now, what will be their implications if once they come to know that they will be taxable in the UAE? They should first register for corporate tax. Second thing, once they register for corporate tax, their taxable income profits, okay, becomes are subject to tax. Okay, now again, we have already learned any taxable profits not exceeding 83,75,000 are taxed at 0%. Now, taxable income profits exceeding 83,75,000 are taxed at 9%. Right? Now, let's go to the natural person. Now natural persons, okay, if they earn money out of their salaries or personal investments or real estate investments, okay, none of these incomes are taxed. But if that natural person is conducting a business or business activity in the UAE, they will be taxed in the UAE. Okay. Now again, there are certain rules for the natural persons. What are the rules? Revenues. If a natural person is conducting a business in the UAE, okay, and if the revenues are not exceeding 1 million, then no need of CT registration. When does the CT registration comes into picture? Only when the revenues are exceeding 1 million. Okay, that's when they need to register for corporate tax. But again, if their profits do not exceed 375,000 in a year, they end up paying 0% corporate tax. Now, we have already seen this 3 million rule in our previous slides. I have talked about the 3 million rules over here. I've talked about the cash basis of accounting here. I've talked about the accrual basis of accounting here. I've even talked about the 50 million rule. I've even talked about the IFRS rules. I've even talked about the qualifying free zone company rule. Please go through these points, and these are very important points. Now coming to the non-resident taxable person. Now again, there are two kinds. One is a juridical person, another one is a natural person. Okay. Now, when I talk about the juridical person, okay, juridical person, mostly they'll be having a permanent establishment, okay, which may be branches or office or factory, which I talked about in a previous slide. Second one is a nexus. Again, I'm repeating, when you see the term nexus, okay, please immediately think about the immovable property. Now, again, if you're having a permanent establishment and a nexus, then compulsory you have to register for corporate tax. Same set of rules apply. If your taxable income is not exceeding 375,000, then you're taxed at 0%. If your taxable income exceeding 375,000, then you're taxed at 9%. Now, if the revenues are not being earned out of this permanent establishment or nexus, then that becomes a UAE sourced income. Now, mostly the UAE sourced incomes are earned by natural persons. Now, who can these persons be? Consultants who are sitting in India or some other country giving consultation works to the companies over here and trying to earn money out of the UAE companies, those becomes the UAE sourced incomes. Okay. Now, when you see any money earned by a non-resident taxable person, okay, apart from permanent establishment or nexus, that becomes UAE sourced incomes. And these UAE sourced incomes are not required to register for corporate tax, but are subject to withholding tax. Withholding tax. As of now, the withholding tax in the UAE is 0%. Okay. Now, so that's it for Article 11, guys. I will be uploading more videos on many articles under corporate tax regime. Uh, Please give your feedback in your comments. If you want me to improve on my communication or my presentation, please let me know. Uh, uh, I am doing my best to cover uh, each and everything under the corporate tax regime, and I hope that I have covered 99% what comes under Article 11. Thank you.